telling everybody, you guys are going to be out of a job. This company is going to be shameful if we don't get it together and make this happen, and not make this happen eventually, make this happen right now in Q4. Now is the time. And Lee Bin knows better than anyone because he's worked at a ton of companies and raised a ton of capital for a ton of different ventures. The capital market loves to pile on when you're winning, but when you're struggling, they're nowhere to be found. They're like a fake crew that follows you around. When you're at the club popping bottles, everyone wants to be there. But when the money runs dry, everyone disappears. What's going on, everyone? Welcome back to Courtside Financial. Today is, let's see what today's date is. It's October 24th, and we need to talk. I know in yesterday's episode, we talked about how NIO had a 252-day comeback story, going from 1,000 to 10,000 weekly sales. We talked about the weekly sales, the optimism, the momentum, and trust me, all of that is real. But today, I need you to understand what is actually at stake here. Because while we're celebrating record delivery targets, weekly numbers, all of that being real, there's a clock ticking, and it's not subtle. It's really emphasized. 70 days. That's all that NIO has to generate profitability in Q4 2025. Not make progress towards, not get close to. The CEO, William Lee, has made this a personal performance evaluation of the entire company. His exact words, the fourth quarter must be a profitability quarter. Profitability must be achieved. And here's what nobody's talking about enough. If NIO doesn't have this profitability story, they could run out of cash in the next 16 months. So yeah, this isn't a rah-rah, let's go episode. This is a do you understand what's happening here episode. Because I need you, whether you're invested, just interested, or whatever you're doing, to really grasp the stakes of what's happening in NIO. Anyways, that sets the stage, but let's get into it. Since founding, NIO as a company has lost 120 billion rand. That's approximately 16 billion US dollars. That's not a typo. That's the highest accumulated loss out of all Chinese new electric vehicle makers. Nobody else is even close to how much money NIO is lighting on fire. And I'm a NIO boy. You guys already know this, but I'm putting the facts right in front of you. Just in the first half of 2025 alone, NIO had 10.4 billion rand in losses. That's about 1.4 billion US dollars in just 6 months. Now, as of Q2 2025, NIO had 27.2 billion rand in cash reserves. Sounds like a lot, right? But not really when you look at their burn rate, their cash burn rate. With new financing, that cash could be gone in 16 months. 16 months, that's not FUD. That's not short seller propaganda. That's just pure arithmetic. Here's the thing that keeps me up at night. The CEO, William Lee Bin, he knows this. He said it himself, profitability isn't for show. It's for the company's long-term sustainable development. Translation, without profitability, there is no long-term. It's just a countdown clock. So what does an all-in moment look like at a company like NIO? Well, let me paint the picture for you guys. In March 2025, NIO launched their CBU system, their basic business units. They divided the entire company into independent units. Each are responsible for their own profit and loss. No more vague budgets. No more we're quote unquote investing in the future. Every unit has to strictly justify its existence with numbers. William Lee personally took over supply chain management. And I'm not talking about high level oversight just to say that you're involved when in reality you're casually involved. I'm talking cost reduction down to 4 decimal places. He told his team, change is imperative. Otherwise, we will not survive. Think about that language. Not we will struggle, not it will be tough. We will not survive. That's not motivational speaking. That's honesty. That's telling everybody, you guys are going to be out of a job. This company is going to be shameful if we don't get it together and make this happen, and not make this happen eventually, make this happen right now in Q4. Now is the time. And the profitability target, it was originally set for 2026 by the CEO, by William Lee. He's the one that moved it up to 2025, and he did that for 2 reasons. One is to force the internal team to tighten the spring. That's breaking organizational inertia by setting a time targeted incentive. 2 is a signal to the overall market, and I'm talking about globally, from New York to Singapore to Hong Kong, that NIO is serious. Because at this stage, market confidence might be more important, actually more important than profit. If investors lose faith before NIO turns profitable, they run out of cash and the game is over. William Lee broke down Q4 into 3 requirements. He calls them the 3 musts. He said it plainly. He said every extra car delivered increases the probability of profitability this year. So guys, the engines are the ES8 and the Envo L90. No new launches in Q4 except the facelifted L60. So just execute on what's already in production. Here's the problem though. To hit 150,000 deliveries in Q4, NIO needs to sell 1,600 vehicles per day. Every single day. To put that into perspective, NIO delivered 87,000 vehicles in Q3. That's their record quarter. Now they need to do 150,000 in Q4. That's capturing 70% of their first 3 quarters volume in just 3 months. September deliveries were 34,749. That's strong, but Li Bin's target is 50,000 per month. They're still 15,000 short every single month. And among Chinese automakers, only Leap Motor is hitting 50,000 plus every month. And we've already discussed them on the channel. Even though they are having lots of deliveries and they're turning profits, they still have their own trouble. So must number 1, by the standards of everything else going on, is already extremely difficult. But William Lee learned from the Envo L60 constraint. So must number 2 is clearly ensure delivery capacity. With the L60, they had demand, but they couldn't deliver fast enough, so they lost a ton of orders. They were supply constrained. A good problem to have, but not when you're needing these deliveries right now in Q4 to show investors profitability. So now the goal is to get the Hefei factory production capacity to 15K units per month by December. As we said in the last video, the Hefei factory is hiring aggressively. They're holding meetings in cafeterias and basketball courts because they've just ran out of office space. Again, that's a good problem, but it's still a key word here. Problem. Because ramping production isn't just about hiring more workers, it's about supply chain coordination, quality at scale, and avoiding bottlenecks. One supplier falls behind and the whole line slows. So must number 2, objectively, I'm speaking objectively, get mad at me if you want to, but it's also high risk. Must number 3 is deliver high quality software in a timely manner. William Lee emphasized delivery of high quality software in a timely manner. And this is because of the recent smart driving accidents. In today's social media environment, think about it. One electric vehicle crashed that people are claiming was using a company's proprietary autonomous driving as a service system can derail a brand's goals quarterly, monthly, entirely, very quickly. Safety is the bottom line and you can't sacrifice that for speed. But delivering complex software updates on aggressive timelines without bugs, that's a tightrope walk. So must number 3, non-negotiable but precarious. But even if NIO hits all these 3 requirements, there's still a big but in the room, and that's profit margin. Li Bin laid out the formula for profitability in a Q1 earnings call. Gross profit margin needs to be 16 to 17%. R&D expense needs to stay at 6 to 7% of revenue, and sales expense needs to be around 10% of revenue. So where's NIO actually at? Q2 gross profit margin is 10%. That's a massive gap. They need to improve margins by 60 to 70% just to hit the low end of their target range. And here's what makes that brutal. NIO has been cutting prices on some models to drive volume. Price cuts hurt volume, but the trade-off is that without volume, you don't hit the 150,000 delivery target. It's a squeeze from both sides and it's a delicate balance. The Envo L90 is performing well. It just hit 100,000 deliveries, showing the low price, high volume strategy is actually working. The new ES8 has over 100,000 small orders. So cumulatively, these 2 things together, these are wins. But working and profitable, they're 2 different things. You could sell a lot of cars and lose money on each one if your cost is too high or your prices are too low. William Lee says cost reduction in Q3 has laid a foundation for profitability. But he also said it's not convenient because financial accounting is still going on. William Lee said cost reductions in Q3 has laid a foundation for profitability in Q4, but he also said that it's not convenient to elaborate because financial accounting is still going on. That's not exactly confidence-inspiring transparency. Now let's talk about what might matter more than operational challenges, and that's investor confidence. Singapore's sovereign wealth fund GIC has just filed a lawsuit against NIO and its executives. The accusation that NIO inflated and misled investors through its battery as a service business. Specifically, GIC claims that NIO sold batteries in bulk to its subsidiary NIO Energy, and they recognized all that revenue up front. But those sales were actually leasing service fees for the next few years. In other words, NIO is accused of pulling future revenue into the present to make their financials look better. Now, of course, NIO denies everything. They say that accounting follows standards because of control of the batteries transferred at sale. They claim that this is based on a 2022 short seller report from Grizzly Research that was already debunked. Here's what I know for certain. The lawsuit caused NIO's stock to drop almost immediately. They wiped out 10 billion yen in market cap in literally half a day. And here's what really matters. The timing. The lawsuit drops just when NIO is 70 days away from its make it or break it profitability target. Right when NIO is trying to convince the market that it can survive without constant financing. Right when investor confidence is most critical. Whether GIC's claims are valid or not, and that's for the courts to decide, the damage to GIC's claim, done by GIC's claims on NIO's stock price are immediate. And for a company that's still dependent on external financing, trust me, that's everything. In September, NIO raised $1.16 billion in equity. That's their third financing round of this year. Two of those rounds happened within a week of each other in September. What does that tell you? Something that I already know because I have common sense. NIO can't self-fund. Every few months, they need another cash infusion to keep the lights on. And Lee Bin knows better than anyone because he's worked at a ton of companies and raised a ton of capital for a ton of different ventures. The capital market loves to pile on when you're winning, but when you're struggling, they're nowhere to be found. They're like a fake crew that follows you around. When you're at the club popping bottles, everyone wants to be there. But when the money runs dry, everyone disappears. All right, real talk. Can NIO hit profitability in Q4 2025? The numbers say it's extremely difficult, but I'm hopeful. You need 150,000 vehicles delivered in Q4. That's a 70% increase from Q3. Gross margins need to jump from 10% to 16 to 17%. Production capacity needs to scale without quality issues. No major software problems or safety incidents either. Continued cost discipline across every business unit, and NIO has a lot of them. That's a lot of things that have to go right simultaneously. But here's the thing that's giving all of us confidence, including myself. Lee Bin's attitude suggests that it's possible. He's not hedging. He's not saying we'll try our best. He's saying as long as we do these things well, there's a good chance that we'll be profitable in Q4 2025, and he really believes it. So from him believing it, I believe it too, and let's see what happens. But here's something that we really have to think about. Even if NIO scrapes by or shows a small profit in Q4 2025, that's not what makes a great company. That's not what makes a great investment. What makes a great investment is, can you be profitable, and can the profitability be sustainable? One profitable quarter doesn't prove to anyone that you're a viable business. So once you flip that profitability switch, that's when you've got to keep it going and you've got to keep improving. And that's when you really got to show shareholders that every single person working at this company, from the CEO to the very bottom of the company, has one interest, has a mutual interest, and that is an interest to shareholders. The real test is Q1 2026, Q2 2026, and beyond. Can NIO maintain profitability while growing? Can they scale without bleeding cash? Can they regain investor trust after this GIC lawsuit? Because obviously it hurt the stock price. So some people who were holding bags in NIO, they are hurt by this. Whether the people that watch my channel all day religiously, watch other channels religiously, are very in tune with the NIO community, say that it's not true, including me. I don't want it to be true either. There are people who are hurt by this, and it is hurting the stock. So can NIO regain investor trust? Is a NIO bull? Do I want them to succeed? Absolutely. We'll see how things shake out, but I wanted to make this very real for you guys. This is not just some other earnings. This is probably the biggest earnings of NIO's entire company history. And so we've got to watch this with eyes like a hawk, and we've got to make sure that we know what's at stake. If you don't know what's at stake after watching this video, hopefully you do. That's it for this episode of the Courtside Financial Podcast. If you found this informative, insightful, educational, useful, at the very least entertaining, make sure you hit the subscribe button, make sure you hit the like button, make sure you click the notification bell icon, leave a comment down below, and share the video. Your engagement really does go a long way in helping out the channel, helping us to continue growing and to reach a broader audience and to educate more people. Happy Friday, everyone. Have a good weekend. I'll see you in the next one. This is Obi. Goodbye.